Hello and welcome to this channel. Uh, Today we're gonna discuss a very important thing, which is that how I saved a big loss and how the markets corrected itself. And thankfully, I did not cut my losses at that moment. We're gonna understand, how things differ versus in option buying versus option selling when it comes to risk to reward ratio. All right, but firstly let's quickly go through our positions that we have been keeping up with for this month and some of the few trades that I've took today. Right, starting from Nifty, uh, we were having a position in last week wherein we were in a bullish spread. Let me open this and analyze, show you what my position were before taking today's trade. Right, so my view was that the markets can fall a little bit because it's still in a downtrend, right? So I actually initiated a bearish spread, keeping in mind that uh, if the markets go downwards, I make a bigger profit than my losses, right? This is equivalent to an option buying position, but I was a little more convinced that the markets would fall, although today it did not. But we still have time to see and analyze how this market goes. All right. The two new trades that I took today was I created a short strangle. If you see, if I just this is my trade that I took today. I've sold a few positions, like a four sold 24 500 put option and 25 500 call option. This is because the markets is keeping somewhere around in the mid position. It's not making big moves, and I've kept the expiry for only 2 weeks. So the any like we would want to favor time in our case, and the time decay happens more when there is approximately 2 weeks of time left. All right. So that is my idea, and my overall position, if you see in Nifty, looks something like this, wherein the markets fall up to this point, I would have my maximum profits. Even though if it does not fall, even if it stays below 25 480 by September 9, I think I would still have some profits, although very small. The important thing is see that I would not be in losses unless the market goes really out of this big range, right? Okay. We had a position in Divis Lab. I exited this trade today. My maximum profit for this trade was somewhere around 5,000. When I was seeing around 4,000 profit, I thought maybe I can exit this position. One more reason for this was that if you see a few days at this, stock prices is rising continuously, and it did not breach its level of this low, right? So it can possibly turn into an uptrend from here. If you see, it did not breach this level, it kind of jumped back from here. So my view is that it can still go upwards and it might never fall down. So I exited this position with a good fair profit. In Godrej Properties, I did not take any trade today. My maximum profit, as you can see, is again 5,000 in this case. Probably if I would be able to see 4,000 4,500, I would be able to close this position. In terms of the market trend, it's still in a downtrend. If you see here, from the past 2 days, it has remained neutral, not too highs, not too lows. So probably we'll have to wait and watch in this trade. In Naukri, the markets went against us. If you see the whole IT sector went up a bit. Let me just refresh it once. Uh, why doesn't it show it going up? Okay, strange. Yeah, but I think the markets did go up significantly at this point of time. If you see, there was a huge move in IT sector today, and which was also visible in Naukri sector, Naukri stock. If you see, yeah, we got a good movement. I took a position on Friday, wherein I sold 4 lots of 1,500 call option, assuming my maximum profit would be 28,000. right? The important factor to look into this trade was like if I just open the Naukri chart again and put it under 3 minutes, right? If you see when it opened up this much gap up, it really rose and went to the prices of 1420, right? At this point of time, my losses were approximately 14,000, 15,000, right? Uh, I have read in many books, right, that a risk and reward ratio should be like 1:2, right? We should, for example, if I am risking 1 rupee, my profit should be 2 rupees. And in this case, if you see, if I am getting 28,500, so my risk should be somewhere around 14,000. So if I had booked this loss of 14,000 here, I would have seen that the markets went back from this position and then it kind of settled here. Now, why I did not exit this position specifically here? First of all, the markets were still in a downtrend. Definitely, we saw a bit of spike here, but because our view was long term, we are taking a position on September end expiry, right? So, in case we are getting one big movement on one day, we do not really know whether our trade has gone wrong, right? And that is one thing in option selling as well. So whenever you are taking a position that the prices of Naukri would not go beyond 1500, right, then our view is that it would not reach that point by the end of the expiry, right? If you're taking this trade and let's say on the next day the market goes against us, right, for example 2%, 2.5%, and we exit that trade, that means that we took a um, positional trade in terms of where the market would go the very next day or in a like 1 or 2 days, right? But that was not the case. Our view was that it should remain below 1500 by the end of expiry. So if an option seller trades like this wherein he cuts his losses as soon as his losses reaches half of its profit, a lot of time it would end up like the option sellers would be booking losses more often than uh, profits, right? And the probability of winning also comes down because then we are not into a trade wherein we are seeking that the market should remain low, but we are into a trade where we are seeking that market should go into our direction the very next day and from the day so on, right? So if you see here, if I would have cut losses in only this single trade, I would have incurred 13 to 14,000 at least in my losses, right? But that is not the ideal way, I believe. In cases we want to hedge our losses or want to reduce our losses, we can do two things. Either we take a very far out of the money position, and by the time the stock prices reaches that position, a lot of time shall pass, which would give us a significant time decay, right? And by that time we can manage if you want to exit our position or not. The second thing is we hedge our positions. For example, if I had sold 1500 call option, I buy a 1520 or 1540 call option as well. Now that would have managed my losses in a better way, right? But if I take a naked uh, like call selling position, and as soon as I see my losses have reached 50% of my maximum profit that I can get, it is not wise to exit that position right away, right? Even if you want to consider a 1:1 ratio when it's option selling, even that is fair, because in the long run when we are saying that option selling can give us at least 80% probability of winning, right? Then uh, for the 20%, even if we have a 1:1 loss, in the long run it would still give us profits, right? So that was the idea. That because of which I did not exit my position in Naukri. And yes, in Reliance I also took a position again. The Reliance stock looked bearish, right? As we can see, it reached a top of 1560 somewhere around here, and then it kept on falling, maybe a slight green candles where people might have booked some profits, but eventually I do not see the stock price going up in the near future. So that's why I've sold a 1460 call option, and I've hedged that position by buying a 1480 call option. Now, why have I hedged in this position but not in this? Because in this case, my uh, strike price was pretty far when I actually took the trade. But here, when I'm taking this trade, it's a bit closer. Let me show you in this case what are the levels of Reliance. So if you see, the super trend indicator shows me that the prices might stay below 1450 somewhere here, right? And even if you see here, we have two good points where the market fell from these levels. So this looks like a good resistance zone. If I just simply expand this chart, so yeah, so if you see this zone, let me also draw it here. Yeah, so probably this is a zone where I want to be careful with. And if the markets are going above this position, then I can consider that my viewpoint has gone wrong. So because of this position, it was close to 1460. What I did was I sold a 1460 call option, and because it was very close, almost one standard deviation away, I had to hedge my position to ensure that I'm not having too much losses in this position. So that's why I've also purchased a 1480 call option in this case. As you can see, the markets obviously, because I took this trade late, maybe around 1 2 p.m. Uh, we can see only slight profits, that too because the market went against us. But despite, there was some disparity between the premiums which were going on. But we'll have to wait and watch on this stock, right? So again, if you see, the maximum profit is 8,000, the maximum loss can be 21,000, but obviously we'll not wait for this maximum loss to occur. In case we see that the position is going against us, the markets are going uh, very close to the levels of 1460, right? And it's kind of not following its resistance at this level. Maybe that is the time when we would try to exit this position, right? All right, that is all for this video. I hope you were able to learn specifically what was my psychology when I saw this like huge losses in Naukri, and then how I kept calm. And then we see that the losses recovered from minus 14,000 to minus 7,000. And then we'll have to see what the actual profit or losses are on this trade. But overall, if you can see, we're at notional 1000 in losses, in of which I've booked approximately 4,000. So we'll start with a loss of 5,000 tomorrow, and let's see how it goes. All right, thank you folks, have a nice day, take care, bye.